Yo, 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 what's up, my family, my YouTube people? Thank you very much for stopping by, checking out my videos, and yeah, just getting this is my interpretation, this is my ideas on what I think the market might do in the coming days. So what I like to do, and besides, this is for training, this is not financial advice. If you need financial advice, please see a certified licensed financial planner. Okay. But anyways, I like to do these nightly videos so that I'm prepared for the market tomorrow morning, so that I have a game plan going in. What you should not do is wake up, let's say 6, 7:30, whatever the time is, and just go straight to the chart, or wake up, look at your phone, and start taking trades. You're going to get eaten up by the market. Okay. You have to think of who your competition is. You're competing against crazy computer algorithms. You're competing against MIT students, Yale, Harvard, some of the best minds that are out there, some of the people who've been doing this for longer than maybe we've been alive. So you got to be on your A game, and on your A game means preparation. So this is what I do the night before. You're going to see how I approach the charts the previous night. That way I'm preparing myself for the morning. So with NASDAQ and US 30, I think today is January 22nd, 2024. It's now Central Time Zone, United States, 6:30. It means 7:30 East Coast time. We all know that both NASDAQ and US 30 has set all-time highs. There is no reason for me to go back and look left because there is nothing left. Okay. So I on this morning's call, you could go back and look at YouTube. I said the only play that we had was for NASDAQ to break this low, we measure a pullback, and then we get into a sell off. We had to wait for that change of character before we could enter. So that's the 30-minute. You saw in the 30-minute that it was severely oversold, and it started to consolidate. And then we had this push up, which took out this high. Okay, let's just draw a little miniature line here for reference point. Okay, let's zoom in. We're going to go to a smaller time frame. But anyways, you can see that it broke that high. And this is getting lower on the RSI. This is why I say this is the only indicator you need. 1, 2, 3 touches. We could draw a little line there. I like to trade on the third touch. 1, 2, 3. Very perfect. 1, 2, 3. At the same time, that gave us a higher high. We're going to come down to the 5-minute so we can see this a little better. And there it is. Came up. If it took out anyone who might have been trying to short a double top, and then it came down and broke these lows. That is giving us an indication that perhaps the market is now going to turn around, or at least give us some sort of retracement. So I'm a Fibonacci person. I like fibs. So I draw it from top to the bottom, from there to right here, which is, if we're thinking about live trading, we're thinking about what was happening on the spot. We saw this break. So then this is where the patience game kicks in. I'd like to trade on the 78, 88.6 area. And to be more specifically, I like for there to be some sort of liquidity sitting below it. And this is that liquidity. So what I like to see is the market to come up, take out something that looks just like this, a little area, a little top that looks just like this, get up into this consolidation. This is the order block that led to the reversal. Okay. Those are buy candles that once it started selling off, were left there. If anyone had buying positions at this area, they're now stuck in drawdown. They're trapped. So the market would like to come back up and take these people, give them the opportunity to get out of their trades at break even. So that's exactly what happened. You can see that I always have my stop loss at 10% of the overall fib. So as you draw this fib down, the stop loss gets larger and larger. So for right now, for this particular trade, it did not hit stop loss. Okay. We would have entered in this 76.88.6 area. Let's just say 78.6 for example. And there it is. There's your trade. Full disclosure, I did not take this trade because if you look at what time it is 8:30 and I dropped my daughter off at school at 8:30. So I didn't get back into the trading my office here until just right at 9 or so. And I had already, I had missed it, which is okay. No big deal. So then what's the next play? There's our entry. It set a new lower low. So the next play would then be to draw a fib from this swing to this low. Okay. And if you could see, it came up and gave us a nice 61. I'm going to zoom in. Actually, let's go down to the 3 minute. You can see a little better. Broke, retrace, gave us the 61.8, and then sold off again. I don't trade 61.8, so I missed that trade as well. It's okay. It's Monday. We're at all-time highs. Taking sells against that sort of momentum is not the safest plan in the world. It's all right. No big deal. But you could see that if you would have gotten into this original sell right around here, your TP1 is the 27 extension, which is right here. That would have hit TP1. You would have left a runner. The second with retracement was right there. Again, your stop loss would have been way up here for both of these. This first one, you would have moved to break even and left a runner right there. So this stop loss would have been nada. This would be your second one. Okay, it hit TP. You would have protected, excuse me there. You would have protected your trade. You would have hit TP and you would still have a runner. The ultimate TP would be down here, which it missed there, but the trade would still be open. So you would have two runners now. And perhaps you closed out the first one. I don't know, but the strategy is working. Even though I didn't take the trades today, you can see the thinking was correct, which is the most important part. You want to get into a situation where you're flowing with the market and you're in the zone. Okay, so there was the low we're looking to break. It broke. We draw a fib top to bottom. There's a previous little area of liquidity we want to get taken out. It took it out. It found the same double top and then popped off and sold off. We had a chance to re-enter or double our position there. Both of those took TP. You've got double runners. So that was today's trade. What are we going to do from now? Like, how do we get into a trade for tomorrow? Okay, so let me delete all this. Okay. So for tomorrow, I like to trade Elliott waves. On a larger time frame, you can see that this is just the first wave, first push. So we might get a retracement back up to this buy candle or somewhere in this area, maybe a little double top right here. Okay, I don't know yet. Then we'll have a second push. We'll have a retracement. Then we'll have a third push. Then we'll be into our buying zone. So this is our plan for tomorrow. Wait for this to get hit. Hopefully it's tomorrow. Maybe it'll be Wednesday. I think there's news on Wednesday. The ultimate, and not only is this our buy zone, we want to sweeten up that with other like with other confluences, right? So this is all hypothetical because we don't know what's going to happen yet. But if we get a push down into this area, that would be the second leg of the Elliott wave. Okay, we could get a retracement where we could take another entry. I don't know if it's going to get there. Again, it's all hypothetical. But the point I'm trying to make is this is the first leg. This is the second leg. We'd like to see this make a third leg into our buy zone. And hopefully this second leg, that TP, is also right in our buy zone. So we're stacking confluences. You have the order block that led to the break off. You have this area. You could call it support, turn into resistance, whatever you want to call it. But that's the breaker area, breaker block, some people call it. So you have a fib, you have the breaker block and the consolidation right there. You would have a second leg TP, and yeah, everything looks good. So let's just wait for tomorrow, because again, all this is hypothetical, but it's a plan. Like this is our plan. We were planning for it to get down into this area here. Okay. 30-30. So this morning, yeah, if you watch this morning's video, we didn't have much of anything going on and sales were sketchy. But as we saw this shaping up, I drew a fib from the bottom because this is like a consolidation area. Okay, where price is consolidating. There's the bottom, and right about here is where it started to break out. So anyways, I drew a fib from the bottom to the top, as you can see. Where's my buy zone? Right there, 78.6, 88.6. Also, this is the consolidation area, right? Right in here. Let's just say that candle, this area before it popped off. Market came down and gave us a wick once to get that last sale candle, but it was kind enough to come back and give us another one. So this is now a nice, so that was your buy opportunity right there. It's a fib top to bottom. There's our 786. I mean, it wicked it perfectly. For anyone that had a buy limit, you would have been activated because it is right there. So that was our buy zone. Okay. Let's clear this out. And that was, I mean, it pumped for 110 pips if you were lucky enough to get into that trade. But this is what I see now. Okay, so what's going on for tomorrow? Look at this clean double bottom. That is 100% liquidity. That is going to get taken out. No doubt about it. Look at this clean double top. Clean. That is liquidity. It's going to get taken out at some point. So then, what is our move? Well, we know that the market is extremely bullish, so we'd rather be buying than selling. Okay. But that doesn't mean we have to. We could find sells. So therefore, if we're going to find a sell, where's the last order block? It's up here somewhere. Okay. We would need the market to take out this liquidity first, take this stuff out, come up here and find some sort of resistance. Okay. Once we get up here, we need to see an oversold on the RSI. You know, perhaps it does one of these. And if it does do that, then we could see that it'd be divergent. Okay. We don't know yet. Again, we're planning for the future. If it does this, then we can start looking for sell entries off this double top. You would have a fib from here to here, like more precisely from there to there. Your stop loss would be there. You'd be taking a sell somewhere in this area. I'm just going to put that as random, but it would be in this area. And of course, your stop loss is always 10%. And so this is kind of what we're looking for on the sell side. So that's our game plan. On the buy side, it's the exact opposite. We see this is a clean double bottom. We need that to get taken out. This is also liquidity. This is an area that could also get taken out because really, as you can see, I have highlighted here, we also have this huge whipsaw back and forth with these sell candles that haven't been touched. So there's a strong possibility that all of this gets taken out. That all of this gets taken out and it finds support in this area. So taking a trade right here in the 786 or the 886 off this fib is a little more sketchy just because it could clear this out before it finds that and then it would hit your stop loss. So we have to tread a little bit lightly if it sinks first. So anyways, once that happens, once it takes out this liquidity, we go to the smaller time frames, we start looking at the RSI, we start looking at internal patterns, the change of character and the breakup structures like I showed you on the NASDAQ a few minutes ago. And if it does do that, then we simply fib that move, that change of character, we enter on retracement and we take a much, much smaller stop loss. Because if that's the case, if that's the true bottom, we miss, but we miss small. Okay. If we miss and we take an L there, we're taking a very small L. And then we reset. We wait for the structure to be broken again. We wait for internal structure. We wait for the RSI, blah, 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 blah. We do it over again. And hopefully it'll hold this bottom. It holds somewhere in here. And if it doesn't, then at least we're taking small losses, which is much better than, being anxious and taking it here and putting your stop loss way down below this and losing all those pips. Because you never know. I mean, it could just, it could just do one of these and not even give you a chance. So this is where the patience plays in. You want to see it come down, give you some type of formation, holding the RSI and divergence oversold. So we're going to leave these lines. I'm going to leave this fib. No, I'm not. Let's undo that. Okay, leave that fib. I'm going to change this box because I like to use the gain fan with that. Honestly, I think it's in this area because it's from there to this is not like I'm not drawing this exact science because these candles have already taken that out. So I'm just going to put this gain fan at the bottom of these candles. And that's basically that last big candle and this first big candle here. So that's my zone. We'll see. We'll see. Really, this is my buy zone here. But, well, this is going to be live trading. Take it as it comes, reading the market as it's giving it to you. We cannot set any buy limits or sell limits. I mean, I guess technically you could put a buy limit, right there, I guess, if you wanted to. And you put your stop loss below just, a few pips, whatever below that, because ultimately you'd want this to hold. And then your next target, your TP1 would be this double top as liquidity. And that's, that's a 3-to-1 trade. That's not the worst. Let's see how many pips you'd be risking. You'd be risking, 56 pips. And hopefully you guys can risk 56 pips. TP2 then would be up here, which would be the double top. And then you would let the rest run. Okay. So if you want to put a stop sell limit in right at these wicks as it gets broken, sure, why not? I mean, that's a decent trade. And if you hold the whole thing, it's a 4.3 to 1 risk ratio. But we want to see this get taken out before we start thinking about buying. All right. There is dirty 30. Goldilocks. It gave us a small scalp entry today. Again, I didn't take it. I didn't take any trades today because it just wasn't the cleanest. It's Monday. The all-time highs on NAS and 30. We're just sitting our hands really. So in the big picture, as we talked about yesterday, we'd like to see this come up, clear out this top, maybe even clear out this top right here, find our TP. So if you look at this first push up, that's the TP for there. And also on this top to bottom fib, that's our sell zone, which is 78 and the 88.6. So ideally, we would like it to get into this zone and hit that blue line, which is 2050. I mean, there's 3 confluences right there in a row. So hopefully we get a push up. Then we can look for sells to come down and to clear this low and get into our buy zone on the even bigger fib from this bottom to that top. Okay. So we're flowing with the market. Where is liquidity? Right now, liquidity is up here. So I ideally want to see that get taken before we buy. We have a trend line that it could find resistance on. We would have oversold in the RSI, which hopefully it gets that way. And then we can start looking for shorts. If it doesn't give it to us and it pushes down, then we ultimately want to see this low get taken as liquidity before we buy up. It might not get all the way there because if you could see, it does have these wicks, and it does have this area right here that you could get caught up in. Let me zoom that in for you guys. So it does have this area that it could get caught in, and then it could hold this bottom, and it's a 100% possibility. So again, that's one of those things we're just going to have to wait and see what the RSI does. I mean, it could do this, right? And be gone. I personally, I'd like to see it go lower, but if it does give me this and it is oversold in the RSI and I'm getting some sort of 1 minute, reversal candles and whatnot, and we go back and forth to time zones, then I would take that trade. I would take that trade, and my TP1 would be that double top. So I would be willing to do that. TP1 right there. And your stop loss would be right at 2001, just below 2000. Again, that's a psych level. 2000, you know, it's a good psych level for a lot of buys to be sitting there. Our stop loss will be just below it, unfortunately. So this is kind of why I like this idea better, buying down here, let it wick through that psych level and then find up. But I'd be willing to shoot my first bullet right here at this 78.6. And if that's a 2009 entry and that is a 2001, so we're risking like 80 pips, a little more than I like to risk. I like to risk about 50 on gold, but you know, hey, it is what it is. TP then would be up here 2038, 2040 area. So I mean, it's 300 pips target. And really, you know, you want to see this get hit, but you'd really like to see it get up here because this first bull run needs to get tapped. And, you know, again, hopefully we can get a nice Elliott wave. 1. This is our 2. Hopefully we get a deeper 2, like a deeper, so we can find our second leg and hit it up there. Okay, so that's gold. That's plan A, is to have it pop off, clear this out, look for sells. Plan B would be to shoot our first bullet in this area, hoping to catch it back up here. If it breaks through all that and for some reason hits our stop loss, then we're going to look to get in buys around right below this 2000 from the 1990 to 2000 area, see if we can find some sort of resistance and some internal structure. And again, the reason why we're doing that in that zone, because that's the big fib. That's the big fib, top to bottom right here. As you can see, that's our zone. Okay, so let it clear that liquidity, let it find resistance, and then pop off. And then hopefully once it does that, it'll break this trend line and get all the way up here and maybe start breaking these, because I honestly, this is a super clean double top. It's also going to get taken out. All right, the target. What do we like to do with targets? Like to put that cheddar. Like to put that cheddar on it. Oh. All right, undo that. Undo. Okay. All right, there's our cheddar. There's plan A and B. Take out liquidity, sell, come down here, find resistance here or here, maybe 2 buys, but entry 1, entry 2. Do your risk reward do your risk how you want it. Don't over leverage on those 2. Let's take a look at GJ, because we did GJ last night. GJ. Let's form out on a 2. Okay, so we saw, if we just hide all this stuff, we saw this clean double top with this nice wick up and then close below. It gave us a non-engulfing candles, but look at these dojis. Look at these small candles. It's losing power. So hopefully that was the candle that wicks out all of these and it's going to start to sell off. We are oversold on the RSI. Let me scoot it this way. So now you can see it's small, but it's getting lower as the price got higher than setting out. So perhaps that's on the 12-hour. Perhaps we can, let's go to the 1 hour. So again, look, divergent. This is lower here. It's getting, the price is getting higher here, but it's getting lower here. I don't normally like to see the RSI get this low, because that kind of says to me that maybe if the RSI is this low, it's got some more room to pop up. So that makes me a little concerned. But this is what we did yesterday. We fibbed. See, and that's another thing, is I wish it would have broken this low. I wanted price to break that low, but it didn't. It gave us a higher low. So I wasn't 100% sure that the market is ready to turn around. If this would have broke, I'd have been much more confident. But nonetheless, it still gives us an almost perfect double bottom. So that makes target, right? If it's a double bottom, that's our cheese. That is going to be our zone where liquidity is. Okay. So then how do we get into this trade? Well, we shot a bullet and we shot it early, to be honest with you. We saw it pop down. It came back up into the 61.8 area and it started rejecting. So we really shot our bullet, I think, somewhere around here. Stop loss is here. We took a half entry. We did not take a full entry because we knew we were entering late. It was Asian on a Sunday. The market hadn't opened. There was a million reasons why we didn't take a full entry. But we didn't want to have FOMO. we didn't want to get pissed at ourselves for missing the trade because we saw it. So I suggested we take a small entry. If it hit their stop loss, no big deal. Okay. If it does come back up to our sell zone, we shoot the other half of our bullet. And now if we hit stop loss, we're not hitting a full normal position stop loss because we dollar cost average and we got into the second position higher up here. So your stop loss for there would be there. And so it's still okay. We're not losing as much as we normally would. But if you look on the big time, this thing has got room to go all the way down. Liquidity here, maybe the last order block here. Maybe it takes out all of these wicks. Look at these wicks. Look at these wicks. I mean, this could be the entry that we hold for the next month. So to eliminate FOMO, we shot our bullet early and we did it as a smaller lot size. Okay. So the only thing I say for this is let's see if we can get a push up to clear out all this liquidity. Look at that. 1, 2, triple top. We do not play triple tops. We do not play quadruple tops. We will play double tops here and here. And if that was a true liquidity grab, this would have sank. Seeing that it's still consolidating gives me a lot of confidence that this is not it. It's going to push up, break out this before it pushes down. So when it grabs true liquidity, it does a V like this. Okay. That is when the market wants to turn around. Hopefully it would have grabbed more pips than that. We can look at that on a little bit higher time frame. Back to the 12. Okay. When you see stuff like this and pop off, that's what you want to see. You want to see a very sharp V. You do not want to see a consolidation. Right? We're not looking for these kind of candles. No. We're looking for these kind. We want to get in here and see this thing pop off. So if you come back and look at the smaller time frame, it's not giving us the type of candles we want to see, which is giving me confirmation that it's going to probably push up. It's all good. I'm only in half position. It's all right. So that's our play on GJ. We're already in a trade. We're going to wait for it to come back up here into our sell zone, find another entry, and see if we can't take this south. And look at this. I mean, it might break the trend line here and go. If it breaks the trend and it sinks from here, it's all good. We're already in the trade. We're already in the half position. Then what we would do then is, if it does pop off and just starts sinking, we would find an entry right here. We would measure that fib, right? And we'd find the entry up here somewhere. And we would take the trade at a full position. Once we're confirmed that the market has turned around and the sellers have stepped in and taken over, then we take a full position. Right now, it's risky because we're obviously in a full bull market. Took a half position, and we'll see how it goes. No big deal. All right. That's NASDAQ. That's 30. That's gold. And that's GJ. That's 4 pairs. If you want to see any other pairs in the next ones, you got to like and subscribe and comment below. I'll go over those. Those are the only ones that I'm looking at right now. Yeah. So again, this is for training only. It's not financial advice. Please like, please subscribe, please share, and please watch the other videos because I'm going to make trendline videos. I'm going to make all kinds of stuff. So that's it for tonight. I'll cut this off here. Thank you guys very much for stopping in, and it was good. It's good being here. Bye-bye.